Hedge fund engine number one has gained a third seat on the ExxonMobil board of directors. The small fund campaigned on environmental concerns, ESG, of course, the idea that Exxon is simply not doing enough to address that in its business. CEO Darren Woods issued a statement saying he looked forward to working with the new directors. We covered this, of course, last week, and I've been reporting that it was likely that Mr. Karsner, Alexander Karsner, would be added to the board. This is still a preliminary count, but it does appear that is going to be the case with ExxonMobil, at least confirming that. We haven't gotten the final account there, but there's a look at the three new directors. Really almost hard to have imagined that this would have occurred, particularly in light of the fact that Exxon, not that long ago, settled with D.E. Shaw and added two members to its board, Jeffrey Ubben and Mike Angelakis. And many thought, all right, they've done what they were needed to do. This is not going to result in any further changes. How wrong anybody who believed that was. By the way, Angelakis and Ubben did receive the most votes, so interesting. Those brand new directors received the most votes, going down the list in terms of all directors, Morgan. But, you know, can't understate the significance of this in some ways. We still have to sort of see what the ramifications are. How much was Exxon specific, as I've said many times, in terms of perhaps a deeper discontent with the company amongst its shareholder base than had been fully recognized because of a history of sort of not communicating particularly well. And how much of this really is reflective of just the changes in, frankly, capitalism in terms of the importance of ESG, even from a profitability standpoint or a standpoint of giving up some profitability to get your business in a different place with the prospect that you will ultimately benefit. But it was seismic. And it is three board members, something that was hard to imagine when this campaign began.
It's so incredible to me. I mean, it was only a couple years ago that I don't think anybody would have imagined doing this to an ExxonMobil, maybe another energy company. But I also think it kind of speaks to, David, the fact that you are in general seeing this bigger fundamental shift among energy companies, at least U.S. energy companies, to be more focused on the financials, more focused on cash flow, being profitable, et cetera. We heard about that from Pioneer Natural Resources a couple weeks ago as well. And, of course, this shift to cleaner, greener energy and sort of reinventing themselves in the midst of what's expected to be how long, that's up for debate, but the secular shift to new sources of energy, new sources of fuel. It's just, again, it's just fascinating to see that Exxon would be in this position.
Amazing, with a shareholder who owned 0.2%, virtually nothing, $40 million. Obviously did have support, significant support from CalSTRS and the like. Carl, the next part of this story is what the response will be from CEO Darren Woods. He did join us any number of times in recent weeks, talking about what he is changing at the company and the track that they're going down now. And it will be interesting in terms of whether he is even more responsive now and/or I shouldn't say responsive, changes even more in terms of what they've been following.
You also got to wonder what this does, how it fits into this bigger picture around energy prices in general as we do continue to have this inflation debate, Carl. Because you look at this, you look at production numbers going down here in the U.S. Yes, we can talk about OPEC as well, but also just the inventory declines as the global economy reopens. And you've got to think all of this factors into longer term, more supportive dynamic for energy prices as we do have that conversation about higher prices in general in the world.
Yeah, and some worries about real shortages and super cycles in traditional energy in the near term as we try to turn, obviously, a massive ship and migrate to a more electrified, for example, global economy.
Shepard Smith here. Thanks for watching CNBC on YouTube.